Welcome to Pressure Points. Our topic is Microsoft earnings, the key takeaways. And as of this recording, which is about 45 minutes after the earnings call ended, shares of Microsoft are down about 3.5%. That's about what they were down when they reported. As soon as the numbers came out, it dropped about 3.5%. During the call, it started to move a little bit higher and then gap down on the announcement that, or on their guidance, and that will jump right into the pressure point, which was their guidance. And effectively, they changed how they worded their guidance. They made it actually easier to understand. Previous quarters, they've given guidance by each segment, and then you had to add them up. This quarter, they just gave a full number for what the overall revenue is going to be for the December quarter. And that number came in basically in line with where the street is at. And if we go back and look at previous quarters, they would usually inch that up by like 1% or 2. It wasn't much, but it's this fractional guide up. And here we had a guide in line. And that's not really what you want to see when you're excited about all the goodness that can come out of AI. And so you saw the stock drop a few percent right when that guidance came out. Maybe one specific point is the Azure guidance calls for growth of 37%. They just did 39%. It was ahead of the street, which was at 36.5%. So they guided up a little bit higher than where the street's at. But if we look back over the past few quarters, they've historically guided Azure a little bit higher than where the street by 2-3% kind of increases versus a 50 basis point increase. And so, I mean, this is the world we live in just after earnings, is splitting hairs, and that's what we're doing here, and to try to get a better understanding of why the stock is doing what it's doing. But I think that is kind of at the most basic level. People wanted a little bit more. And I'm going to jump through another couple quick topics, which is related to Azure. They did talk, not surprisingly, that they are supply constrained. So that number would have been higher. The 39% in constant currency would have been higher. It's the same growth rate in constant currency as they had last quarter, but that number would have been higher if not for supply constrained. And they said that they expect that to continue through the end of their fiscal year, which would be June of next year. The same message we got from Google, they're supply constrained. They said through the end of 26. We're going to hear the same thing from Amazon tomorrow, supply constrained on AWS. All that means whatever numbers they're printing, they could have printed a higher number. And then the last piece, just quickly on CapEx. They were, if we think about the most aggressive was Meta, then Google was probably the least. They were more aggressive, but the least of the three. Microsoft was somewhere in between. And so as it stands going into this, the street was looking for 40% CapEx growth for fiscal 26. And so they talked about it being up substantially for next year. And my sense is, even though they didn't give a specific number, it probably comes up to 45, 50%. We're starting to get into some of the same zip codes that Meta's in. And I think that just the overall takeaway is they're still fully bought into the opportunity around AI and want to continue to invest in the infrastructure, in part for Azure, in part for just getting a bigger AI brain that they can allow third parties to leverage. So that's Microsoft, the least eventful of the three mega caps that are reported tonight. And with the simple takeaway is that even though it wasn't up and to the right, all the fundamentals are intact for their long-term ambitions around AI. On behalf of Pressure Points, I'm Gene. Bye for now.